here, financial advisor with Jazz Wealth Managers, and I'll make this one quick today. I'm going to sneak in a little bit of marketing, but I'm going to tell you what I think, give you 4 myths that our industry has been talking about here about millennials, and you let me know what you think. I'll let you know what I think. This is our short video series where we just get right to the point, get the hell out of the way so you can get back to work. Here we go. Myth number 1 is millennials have lofty retirement goals. They have lofty goals about buying real estate. They have lofty goals about starting a business. And they have lofty goals about what age they will retire, most of them thinking 40 years old. That's a myth. I can tell you that's a myth because every one of our customers, I sort of force to go through an onboarding process where we ask you what your goal is. How much do you want to save for retirement? What year do you want to retire? What ages? You know what I mean? Just like the videos that we do where we outline those for you, I do those for our customer. I've done 444 of them since we started forcing our customers to do it, or not forcing, but putting it on them in the beginning. And I did the math real quick before this video. 92% of them picked 65 as their retirement age. So the fact that the industry thinks that you guys want to retire early is simply a myth. Millennials are sort of smart about knowing what they want out of life and how they're going to get there. Myth number 2 is that millennials underestimate the amount of money it takes to work with a financial advisor. Look, I get many calls. You can schedule a call right on our website. You speak directly with me. I get many calls where people go, Dustin, I spoke with Raymond James. I spoke with, other companies out there. Maybe I shouldn't name them. I gave them a call. I wanted to work with Franklin Templeton or T. Rowe Price, and they basically told me to go somewhere else. Actually had a call the other day from someone that tried to work with Wells Fargo advisors, and that advisor told them to call me. I thought that was so cool that they even said that. So millennials tend to underestimate. They think you could just go work with a financial advisor, and in truth is, if you have like less than $50,000 and you're starting off, you go to a financial advisor. If they say they're willing to work with you, they are trying to sell you something. They may be trying to sell you an index universal life policy. They may be trying to sell you a front-loaded fund. Millennium Trust and American Funds is just incredibly good at that. Not that it's a bad thing, but they will try to sell you front-loaded products, meaning you pay them up front as you go, sooner than you would at any other advisor. They do that because they need to make money off the small account. So unfortunately, those of you that have less than like $50,000, you have nowhere to go besides Jazz Wealth. If you want to give us a shot and you want an actual advisor, if you want to invest yourself, of course you could do it yourself. But millennials underestimate the amount of investable assets needed to work with financial professionals. That one I actually believe because I do get that one a lot where people say that. Myth number 3, millennials are not skeptical of financial services and thus not skeptical of financial advisors. That one cannot be further from the truth. Let me tell you how I know that one. I have talked with a total of 1,388 people since we started taking phone calls up to December 31st of this year. That's how many scheduled phone calls I have had. You can imagine how busy I've been there. But almost all of the people who were new investors had some very, very, detailed and sort of tough questions to ask. Rightfully so. They would ask me, how do I know my money's safe? How do I know that I'm not going to sell you something? Are you a fiduciary? Where are you registered? How are you registered? The point is, you should be skeptical. Not that financial advisors and these investment advisory services are bad. It's just, you just want to know how they work. Right? What are you really paying? What are you really getting? If you're going to pay more, are you getting more? If you're going to pay less, can you still get some help? And so you should be skeptical because, like I said for myth number 2, if you are just starting and somebody's willing to work with you, why? If they're not making any money, then why is it that they're willing to work with you? So myth number 3, that most people are not skeptical. That's what my industry says. I couldn't disagree more. I think people are and should be skeptical. Just like any other business transaction, you should know that. By the way, this Thursday, we're doing an open house about Jazz Wealth. We'll be live here on YouTube. We're just going to briefly go over what it is to work with us, what does it mean, what do you get, and of course, we'll walk through that. Myth number 4, the millennials say that the industry says that the income challenges are what holds millennials back from starting investing. Absolutely wrong. Let me know what you think down below. But look, you can invest $1. right? So you can go to any one of these online firms where you do it yourself. You could put $1 in, you could start investing. In fact, you could pretty much be pretty diversified with only $1. You could do the same here at Jazz Wealth, where you start with something small and get started. So I don't buy the idea that people say, oh man, if I just had an extra dollar, I would start investing. Actually, the CFA Institute, the Charter Financial Analyst Institute, said that 40% of those that they studied in the study that I'm referencing here said that the reason that they don't have a retirement account is education, lack of understanding. They don't know where to start, how to begin. Oh, and by the way, they're skeptical that someone's going to rip them off. So, hey, you think these videos are helpful? Look on our channel. We have hundreds of videos to help you. What do you think we do for our customers? I'm constantly teaching our customers, because the more you know, the more confident you are, the more questions you'll ask, which means we can work together to give you sort of that, detailed plan, or a path to get you to where you want to be. Look, in short, those are just 4 myths, but it's very obvious that my industry does not know their customers. Now, I want to help them. This year, I hope to speak at a few financial advisory conferences where I want to share with them the data that I have from these videos and things like that I've kind of learned from you guys. If you'll do me a favor and hit the subscribe button, not for any personal gain, but so that I can go to them and say, look at all these people, right? They want to learn. You should teach them. Help me out. Well, anyways, that's 4 myths real quick to get in and out of your way. Let me know in the comments below, do you fall into one of those categories? Were you in one of those categories, but now you know something and you're a little bit better? Hopefully because we helped you in some way. I appreciate it. That's it. That's your FinTips for today. We'll see you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.